Remember, please hit like and subscribe for me. Thank you so much. Okay, let's go. Hi, everyone. Today is Monday, September the 22nd, and this is the Moneyball Morning Report for the Benzinga Pro platform. My name is Anne-Marie Band, and this is the E-mini S&P 500 that we're looking at. A couple of things I want to share with you. First of all, we had a very big closing candlestick formation where we had a lot of zero DTEs expiring. We've got a brand new series, quarterly formations as we're staring those down. And then let's take a quick peek at where the call walls and the put walls sit. This is very interesting. Notice the zero DTE calls, everybody's doing really well with that. The puts for the zero DTEs are underwater in this very tight range, right? So the traders have positioned themselves long into this range, and we've got this midpoint at $6,762. Now, you might go, that's a weird thing that you're doing right there, but we're going to look at that later. I just want to show you that it exists as the week begins into these spaces. There's also a very big range from call resistance all the way down to major put support, and the midpoint of that is 6,650. And so we're going to stare that down today in terms of potentials. All right? Just for grins, just for giggles. Oh, for the love of Pete. What is this one? 6,650. Let's draw that number, 6,650. And so that's what we're going to stare down. I am going to delete this Fibonacci because it does make things a little bit noisy as we stare down the price action. Now, let's talk about where we are in terms of within range and within value. Have a look. Last week on Thursday, we had this very wide angle motion. Notice this was the Fed meeting. There's more volume on this closing 30-minute candlestick formation than in the Fed release. I think that's very, very interesting. Now, if we put it in an hourly chart, that formation is going to be important. And so, you know, Rob Smith always said that hourly, I don't know if you guys remember him when he was alive. He was a really great guy. I love the guy. He talked like he had marbles in his mouth, but outside of that, it was great. You just had to slow him down because he was just all over the place. But he was very, very smart. And I am going to log those numbers because we can see them in the range of this formation. So what are we staring down? We are within range and within value. Okay? So the value area high, now when I say value, I mean this region here. If we just advance it, we just advance it to the 3 days that we're staring down, you can see that value area high and value area low trap us where we are right now. So there's a very sideways market from this perspective. Now, let's take a look at it from the perspective of trend. We're underneath the VWAP, right? So they're more, the people who are long are underwater here. We are positive with trend, we've got upward trend, and we have negative momentum. So what does that mean? When we have positive trend and negative momentum, the traders are looking for support. Here is our, wow, that's not 3 a.m. That's not 4 a.m. That's 3 a.m. So we've got this big 3 a.m. candlestick. It's got a fair bit of volume attached to it. Now, normally we have the 4 a.m. candlestick that is taking precedence. And so once again, we've got to put ourselves another line. So what is this telling us? We have got ourselves a bit of a mess. When we have a bit of a mess, what do? We look for the edges to get ourselves a good trade that will last, either upside, downside, wherever. What we can agree on is that the relative opening range candle for 3 o'clock and 4 o'clock are the same. So $6,711, a breakout above that takes us higher into the last 30 minutes of the trading day from Friday. The break below at 6,701 takes us in a stair step to 6,700, which is the point of control. That's where everybody's been arguing over the last 3 days. Notice. And then below that, the VWAP and this $6,686 formation that gives us the top of the candlestick that began all the noise with the Fed release. Now, here's a very interesting thing, twofold. One, this is the weakest performing week in the month of September and the year, generally speaking. That's number one. Number two is that there is it's sort of like sell in May and go away, but it's called Sell Rosh Hashanah by Yom Kippur. So, how often does that work? I don't know. But we are coming into the festival of Rosh Hashanah, and there is this thing that says Sell Rosh Hashanah by Yom Kippur. Now, for me, what I'm looking for are bounces that give me a continuation of lower highs. If that is not the case, then I am still sitting in this upward formation. So I'm going to look for bounces that fail in order to take a short. The next thing I'll be looking for is fades that fail to take a long. And so this here, this line, is our 200 exponential moving average. There's also a fair bit of wiki action here. I don't draw trend lines worth diddly. But if we take these lines and we try to get them round and about where these wicks are, you can see that they're staring that down, right? Little bit. So what this gives me is a compression zone. And you can see it gives us a mixed bag. Upward trend, negative momentum underneath the VWAP. So it's a cross current. Could you take the long right here? Absolutely. It's the 4 a.m. candlestick. You can take the 4 a.m. candlestick. No, sorry. Yes, you can take the 4 a.m. candlestick, divide it in half. Let's draw that Fibonacci. Come on, Sally. And as long as we don't get above the VWAP, 6707, we have ourselves the possibility of breaking this trend line. I think it's still a mess, but this low volume event suggests to me that we may have ourselves a potential magnet down into the wicks and the closing VWAP of, what is that? Friday, Thursday, Wednesday. This is the closing VWAP of Tuesday. And that number is 6,671. Wow, we do know that number. 6,671 to 6,675 is where we saw the flip of institutional motion that was very heavily weighted negative, and they turned around and absolutely flipped that gamma to positive. So this line in the sand is critical mass, 6,671. We could see another fight club there during the week, or it could simply not even go there, and we can walk right back up the range, back into 6,711 to 6,716 to 6,721, and the halfway marker of the 30-minute candlestick here is probably somewhere around 6,726. I'm going to look for the open of the candlestick where heavy congestion is. These are the places that I'm looking for positions. So I'm waiting on my setups. I'm going to set my alerts down at these ledges, 66.86.50, 6711, and then 6726. Notice, my suspicion is they try to test it up here at the VWAP. That 6707 also gives us a shot at downside pressure, but it might not be a lot. It might just be 5 or 6 points, okay? But that's what we're staring down. That's a lot. That's a lot to go on right there, but it is what we're staring down. It is pretty messy, but that's what we've got. We've got messy charts. We have institutions that were short and now flipped long, and then we've got this big move. Let's do some motion here. Where in the world is... Okay, call resistance and the 0 DTE calls are sitting in the same place. Very interesting. Let's draw the Fibonacci from high to low. We'll see how this number maps out this week. You might be wondering, why in the world are you doing this? I'm always talking to folks that are noticing interesting things in the market. And this is one of them, this 50% space. Now, notice the Fight Club. We're sitting in range and in value. Last 30 minutes of the trading day. Let's draw those. Right? We can see that we actually opened inside of this box. We hit the low, bounced up into near-term highs, and then gave us a lower high. So we had a high, a low, a lower high, a lower low, a lower high. Guess what that means? Yeah, exactly. It rotates over. So here we are now in the battleground of the first 30-minute candlestick of Friday. Same formation. So we know these guys are sort of running in tandem with each other, the ES and the NQ. We're in the first 30-minute range. Let's see where the 50% marker is. Remember, our entire system rotates around where is volume. Where is volume and how are the traders responding to it? Now, on top of this, you can superimpose any trading structure that you like. Truly, if you say, hey, I want to use moving averages, or I want to do X, Y, or Z, whatever you want to do on top of that, it's a great way for you to go, you know what? I can see what the traders are doing. They're trying to hold this floor here. So they're going to try and push themselves up into the top of that 30-minute candlestick formation. And that is 24,817, right? That's where they're headed. It's also where the VWAP is. We also have negative momentum. We also have positive trend. We also have a low volume node that is very messy right here in this space. And we also have the very low edges. Oh, look at that. It coincides. Shocker. Shocking, I tell you. So we're gonna use that midpoint area, 24,524, as a potential drift down. I have no idea whether it's going to go. I really do not. If I'm to look at trend, and I try to get these, it's in between, right? It breaks here, it doesn't test there. That trend line is certainly showing up. The break of the trend line will very likely send us into value area low. Okay, so we're going to stare that value area low down, realizing that the point of control at 24,750 is a support test that could give us a buy. Now, on the show with Jay last night, he mentioned this region around 24,750. He actually said 76 or so, and that is holding fairly nicely. But we have negative momentum. We have a series of lower highs. We have upward trend from underneath, downward trend from above. This is telling us that we are in a cross current, and for now, we sit underneath the VWAP, 24,813, telling us there is a pressure event for sellers right around the zone of 24,820. Now, can we see anything in that zone? In terms of volume, I don't. What I do see is the 30-minute range, 24,834, that gives me a support zone, and then our call resistance line at 24,850. What kind of trade can I put on here if I'm looking at the chart and saying, hey, I want to trade now? This is sideways, so you're going to wait for it to hit the bottom. You're going to see how much risk you will assume if you take the trade, and you can take it long from the bottom or short from the top. If you want to take it right here at this 24,776, your minimum risk, in my mind, your minimum risk is going to be 24,760, right? And why am I choosing that? I'm looking at the the open of the 30-minute candlestick formation from Friday, the highest volume candle, right? So that's how you will stare that down. My assumption is the same. I believe that the bounces are going to sell, but I also believe the dips are going to be bought because there's a pervasive bid under the market. It's pervasive bid. What we have to do is see if these guys who flipped positive gamma here hang on. It's going to bounce right off of these zones. Now, right now, we are inside of this very big noisy patch with a high at 27,787, right? If I just draw a box around here and I don't look at the wicks, come on. Well, no, maybe I should look at the wicks because that brings us right into the noisy fray, right? Big overlap. For me, the buying pressure is going to be very important. We might have ourselves a bit of a rock fight, but in my mind, this area at the base of the 30-minute opening candle formation, it's got some wicks there at the base of 24,734. That's where I would start saying, hey, let me see how this goes. I think I want to go long. All right? And that would be that. Next, we'll take a look at gold. Several of us play gold. Let's remove all our drawings. And as we take a look at gold, it is in a bit of a rounding formation, but listen, these things have been bought up 6 ways to Sunday. Look at the momentum here. Look at this momentum. Dips going to be bought well above the call wall. Well above the call wall. The put wall is also well below. The trapping of price into this area is going to be something very important. Buy zones for me don't look attractive unless I get a dip down into 3,724. Now, you might say, what are you talking about, Anne-Marie? We've got a VWAP that's up. We've got moving averages that are up. We have momentum that is up. And we have volume coming through, especially at the 230. This is interesting. I wonder if we had any currency news. We had a very big candle formation right here at 230, and that is around 3,753, right? That's the breakaway, but you could have support that's 40 ticks away, right? That's $400 of risk. You want to use a micro? No problem. But, you could pay attention here. This is important. This is really, really important. Value area is very tight. They stayed compressed for 3 days and then broke right out. And so this is in range expansion. Could you buy down here at 3,750. That's what I would prefer, where old resistance is confirmed as new support. Yes. And then, you know, you're sitting down at that halfway spot in the big volume event. Oh, isn't that interesting? We held it right there at that wick, 3,746. Right, 3,746. If, per happenstance, we lose that 3,746 area, we've got ourselves a rotation into the opening range candle formation, and that's 3,731. Dips are going to be continued to be bought in my mind, but here's the thing. Remember, this is a financialized instrument. If the market begins to fade and people get any kind of margin call, they are going to liquidate everything financialized. Now, I don't particularly see that at this juncture, so nothing really to be concerned about, but don't forget that this is a financialized instrument. 3,710 is Friday's high volume candlestick high, 3,709.50. The point of control, the VWAP, and the call resistance line is 3,700. These guys have to buy the call resistance up here because they are just vastly underwater, right? They're going to just start rolling the contracts up, buying the instruments, trying to bring themselves into a zero equilibrium. And I think that's what they're trying to force right now. Let's take a look at oil. Is this the right contract? I think it is. I think we have moved to X. Okay. So here's what we're staring down. Let me see if V is still, let me see how V looks. Oh yeah, we're definitely in X. All right. So remember, about a month and a half ago, we talked about why oil is very likely to continue downward, because the forward contracts were in backwardation, meaning they were cheaper in the future than they are in the present. And so we have a contract roll and we are seeing the continuation down. Take a look at this. You can see all of this volume by time of day is all that goldenrod color simply because we are in the new contract and that volume has picked up significantly. So what are we staring down? A downward formation, the roll in the contracts, the highest volume event here, right? What is this? 4-hour formation. We've broken down from it, right? So we've broken down from that ledge. We broke down from this ledge. We broke down from this ledge. Taking a look at the big volume, right? Big volume breaks. That's the next one we want to look at. And that gives us $63, right? Look at how far the call resistance is away from put support. Holy smokes. Just for grins, let's give ourselves. Somebody's pricing in some volatility. 50% marker. Well, shocking, right? We've got that at the 63.50 line. That is already marked for us. We don't need to keep this. We already know that line. And now we're just walking down to support. This is the next broken line of support. And it's where the VWAP is at the present time. And that number is $62.27, $62.28. We have a dip, shallow volume, and the next dip looks like 61.71. Let's see where that actually is. We put that here at the open of this bearish candlestick, and then the floor, let's do Fibonacci there. High to low. They came in, held the 50% range. This could be a megaphone, folks. we could break up and then all the way down. My suspicion is that we stay sideways here. So if you're staring down oil and you're saying, hey, I want to look for something, support ledge 61.39. After that, we've got a double bottoming formation that gives us $61.06. Excuse me, $61.06. So, big drifts down, a lot of selling pressure, a lot of negative momentum in the broad chart. 30-minute formations underneath the VWAP, negative trend, lots of negative pressure, price action on the rise, volume is following the direction, and so the bounces are going to give us sell zones. What am I looking for? Value area low around the region near 62.40 to 62.50, all the way up to 62.70, where we had this tremendous sideways pressure in the overnight. And this candlestick at 2:30 in the morning gave us a relative breakdown area that's $62.75. Upward motion, $63.47. Don't actually see that area. Remember, the administration has wanted oil to sit down near $60. And so with this backwardation, with things slowing in the market in general, we've got a relative bounces being sell zones. So watch out. I would say anywhere from $63 all the way up to the VWAP, where 63.20, that should give us a balance zone, right? If you want to go long here, take a look at these guys. Still making lower highs and lower lows. They've got to breach this area at 62.07, expand and come back down and hold somewhere around $61.90. Okay? Finally, let's go to SPY. Wow, did we just get a piece of news? Make SPY quiet. You can see we're sitting in this big pocket. Largest volume events are still the high area of $660.51, and the low area of $654, right? Dips are going to be buys. You can see that based on the wicks. The closing candlestick formation, take a look. We just tested it. Almost to the tick. $663.38. You can draw Fibonacci there. Came down into the 2.5 area. Yeah, those Fibonacci's are doing pretty good today in terms of the range-based formation. If we lose the floor at 661, that's a big number. We are in the value area. And so walking down that value area and filling in the volume profile at 661, all the way down to the point of control at 659, gives us that relative pressure event coming into the support zone. Okay, so that's it, folks. Deep dips, going to be buys. We have a little bit of overhang sitting in this last week. A lot of statistical things that say bounces ought to be sell zones. We just have to watch for those bounces to really give way to put us in the right position. All right, take care, everyone. I'll see you in the streams.